What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is January 1st of 2020. Wait, hold on, let me redo that. Hold on. What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is January 1st of 2020. Something's not right. What? I can't drag on the years anymore. 2017, 2018, 2019, 2020. No. The intro is ruined. My channel is over. Nah, I'm just playing. What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is January 1st of 2020. It is the new year, and even though I may not have that same Shazam that I usually have when I read out the date, we will still be here for the new year, and it's going to be an exciting one, guys. I hope you all had a wonderful time yesterday for New Year's. Hope you get to spend it with family, friends, or if not, just have a good time, just hanging out and stuff. It was a good time. I got to meet up with some friends, spend some time with family as well. But we've got a lot of things to talk about as we step into the new year. There's a lot of exciting things going on, not only in cryptocurrency markets that we're going to be discussing as we take a look at a new data science model in relation to the energy input to Bitcoin, but along with that as well, we're going to be talking about cannabis markets as well, showing some signs of upside here over the last few days, and really talking about whether or not this could be a sign that we finally reached a bottom in cannabis markets. We've been waiting a long time for this. So we've got lots of things to discuss, but I want to let you all know real quick that the video was sponsored by eToro. Now, for those of you who don't know what eToro is a social trading platform, and they just recently opened up to US markets for cryptocurrency trading, where you're able to copy a variety of traders, and you can actually view their stats real time. You can see how they've performed over the last few months. You can see their current portfolio holdings and also a chart of their performance over time. And by hitting the blue copy trade button, you can trade real time alongside them at the same exact prices. So if you guys are interested, check out the link down below in the description for more information. All right, so let's go ahead here and take a look at the broader cryptocurrency market. Really, not much has changed here. We're seeing again a lot of the plays here for. So we've talked about like Chainlink, for example, that are working with oracles or kind of institutional services for blockchain like IEXEC, RLC, leading the market right now. But for the most part, most cryptocurrencies in a no-trend scenario, most pushing towards a little bit more towards the downside at the moment. Again, following Bitcoin here, if we take a look here, valuations, again, relatively unchanged here, still hovering around the $190 billion to $210 billion range. Again, we're going to be probably hovering around this range here for the first half of the month, and eventually when we get a pickup in Bitcoin, the general market will follow. Again, don't want to stress over it too much. Still keep an eye here on Bitcoin dominance. We'll talk about this in the next couple of days, but for now, I really want to actually talk mainly about an indicator here for Bitcoin. So again, as we start to push relatively sideways here over the last few, over the last few weeks here, as we're taking a look at the BLX indicator, a lot of people are curious if we finally, are starting to find a bottom here in markets. And I think the best thing to do is, rather than just simply focus on price, which I'll be fair, I think price is giving us a good amount of signals, not to mention we're approaching this line of support here historically for Bitcoin. I think that we've got enough price signals to be relatively confident that the bulls might be winning out here. But again, stepping out of just technical analysis, which can be very subjective in some cases, I want to go ahead and talk about a very interesting data science model. And this is one that I don't think a lot of people know about. Something that a guy named Charles Edwards has put forward, known as the energy value oscillator. Now this, again, like some of the other data science models that we've talked about, focuses heavily on talking about the amount of energy input that goes into Bitcoin mining. So we've talked about a lot of indicators that talk about mining in relation to Bitcoin, the amount of new output of Bitcoin compared to, for example, in the sense of like dollar terms and stuff, and we have some ratios that we've talked about that in the sense of the charts that we have on Look into Bitcoin. A lot of interesting data science models, but this is a new one that really focuses in on the energy input directly put in joules, getting down to the core of how much hash rate is being pushed into the network in this case, how much energy is being pushed into the Bitcoin network, to get a sense of, whatever we're putting into Bitcoin should be, in a sense, giving it some sense of fundamental value. And we do see Bitcoin again fluctuating around this, but it provides a chart here that builds a very interesting ratio. Now, This is the tweet I saw originally. Charles has been putting more and more effort into it. In fact, he's actually got a trading view strategy, or not so much a strategy, an indicator that you can actually use for free. If you guys want, I can leave this link down below. I'll put a comment, a pinned comment with this for the video. And you can see here over time how it generally works. So we'll talk about it. There's a Medium article for some extra details, which I will attach to the trading view indicator here. What I love is that he put it out for free. I appreciate that from Charles and stuff. It's really awesome. But anyways, something that we don't normally have here on Looking at Bitcoin. All right, so I want to go ahead and showcase it on the chart here. So what we can see here is that for very, again, I wouldn't actually say it's brief periods of time. I'd say it's about a pretty equitable amount of time. We usually hang in this green band versus the red band here, but you see these kind of extremes where back here in 2013 and 2014, we saw Bitcoin go towards parabolic run-ups due to the craze of the Silk Road and just kind of the social phenomena of Bitcoin. And over time, we've been having generally kind of lower highs in this case, and that's understandable. Minor markets around Bitcoin are much more mature. This isn't a GPU market anymore. This is something where ASICs are dominant, and we're really starting to see a whole new market formulate around Bitcoin mining where profitability is not as high as it used to be. But I digress. This again is focusing on the energy input in this case, and it's factoring in a few other things. If we take a look here at the Medium article, it discusses, if you take a look at the formula, it's actually quite simple. It's taking in the energy input. So this is the amount of joules, the estimate of how much joules of energy we are putting in to the Bitcoin network divided by the supply growth rate. So, again, factoring in new issuance of Bitcoin in this case. And then, in this case, factoring in the fiat value. Okay, so here's the three different things here. Energy input, hash rate, gigahashes, times the mining energy efficiency, right? Along with that as well, supply growth rate, so the annual increase in circulating Bitcoins. So again, we're taking in the stock to flow model, one of our favorites in the crypto space, and the fiat factor. So taking in, again, basically the fiat USD value of energy in this case, all right? So we have three factors here. It's a relatively similar formula, or simple formula. And we can see here printed on the chart that anytime we're around this range here, right, we can go ahead and just generally kind of open up the charts here. We can see that we start to enter into a range where our risk to reward profile starts to become a lot more favorable. The longer we hold down in this band, it's more of a sign of confidence again over time that Bitcoin has remained undervalued comparative to the energy input into the network. So it's a very interesting concept. The theory here is that whatever you're putting in, as I kind of hinted to earlier, whatever energy you're putting into Bitcoin, that should be at least its baseline fundamental value, right? And some people would agree or disagree with that. I don't really care so much to make a fundamental argument as to whether or not that's the case. All I care is if the indicator itself is going to help me predict when bull markets are coming and when it's a good time to buy. That's really all I care about, because I want to make sure that at the end of the day, my positions are set properly, that I'm buying and averaging into crypto for the longer term cycles at good times, right? Well, we can see here, looking historically, what's interesting is you see so much similarities to history. And the last cycle, for example, back here during 2015 when we were going through the bottoming phase, a small step out here of the indicator at very similar ranges here, and then again a dip back down here for a couple of months, right? Coming back here in December 2015 and holding in there for more than another half of a year in this case before we really started to tick upwards and enter into a full swing bull market, right? So I think it's very fascinating. Again, this is another tool I would use alongside many data science models. And the nice thing is we can print it right here in TradingView, and you can use it on any time frame. You could look at it on the daily if you'd like. You could look at it on the monthly if you really wanted to, right? It's not just on the weekly time frame. So again, you're going to get more precise data if you look on the daily or the weekly, but this is just something to kind of give you perspective that we're repeating history here. On the sense of energy output, it showcases that, if we're following history, this is similar to previous time ranges where Bitcoin would be seen as undervalued in this theoretical kind of analysis of taking in the amount of energy input to the Bitcoin network. So just wanted to share it with you guys. Again, if you like data science like I do, if you like these kind of models that give us some understanding of where we are historically in the sense of, for example, maybe the energy cost to produce Bitcoin, miner input, the halvening,
or sorry, I always said halving, the Bitcoin halving event that's coming up here in a couple of months, where we are compared to other indicators in the sense of price, just to put it all in perspective. There's so much here on looking at Bitcoin, and it's all free. That's the coolest thing about it, guys. All this awesome data is here, and it's time we start looking at it because I think we've got an exciting year coming ahead. Most people are not looking at this because A, most people don't know about crypto, and B, most people don't take the time to do this kind of research, plain and simple. All right. So I hope you guys enjoyed that and enjoyed this interesting perspective as we, again, approach the lower band here that is historically held on the logarithmic chart. I think we're entering into a very interesting month here in January as well as February. So I'm excited to see what's going to happen here over the coming weeks. All right, so the next thing that I want to talk about, and really to kind of wrap up the episode, it's going to be a good few minutes where we talk about this. Cannabis markets had a pretty big breakout day right on the close of the year. You can see here, we're taking a look at two major ETFs, the MJ ETF and YOLO ETF. Now, these are both ETFs that give you a pretty broad exposure to a lot of the US traded, or really a lot of them are Canadian companies, but they're also traded as ADRs in the United States. Basically, we saw the other day about a 5 to 6% move across the board on cannabis companies, and it was a pretty solid move. Now, the important thing to take into mind is obviously we've had a massive discount here, a big correction in cannabis markets. If we take a look at the MJ ETF, which has been around for a while, we can see here that if you take it from the absolute top here, back here in September of 2018, you can see to the absolute bottom that we've set so far. We've had about a 65% correction, which is a nice correction to see. It's, nearing very close to, basically pulling back 2/3 of value in the market, which is a very mature correction on a market that was way overvalued at the time, right? So if we take that into account, we take into account that the ETF is showcasing here a lower high. We're not seeing that on the YOLO ETF, but I would say MJ is a little bit more of a mature and more traded ETF. A lot of people will be curious, is this a sign of a bottom here? Instead of setting new lows here like we've been doing for months on end, so far we've actually just set a higher low in this case. So I think it's a very fair question to ask. And again, if you guys have positions in cannabis companies, I'm not trying to rail on you guys, but I will say a few things, okay? I want to make it very clear first off the bat that a lot of these companies I would not fundamentally invest in. Right, cannabis is a very competitive market. Along with that as well, it's not a very profitable run right now. I would simply trade these companies off of the idea that their momentum plays, right? And to the more important point here that I want to make, the clear point I want to make is that I'm not going to try to pick bottoms. Plain and simple. If you look anywhere historically in this chart, guys, you will see time and time again where we have these 5 to 6% rallies, maybe even more. In fact, maybe we have like we had back here on November 19th. For a 3-day period, we went from 1590 on the ETF all the way up here to 18. Let's see the actual high of the day. I think it was actually printing pretty much near even. Yeah, it was 1898, near $19. That's a great return for 3 days on the market on an ETF, right? But look what happened afterwards. We came right back down. And this has happened time and time again where we have about a week or so of rally and then the sell side outweighs it and price goes down. You can see it in the volume every single time for months on end. And this has just been happening time and time again. So as much as I'm eager to get into this position, guys, there's a difference between picking bottoms where, for example, if we step back here, God, it might have looked really good to buy here at $20. I mean, it was more than a 50% discount. But if you've been buying around that range, you'd be holding on to something, and you might have even fudded out of your position and taken a loss. I don't want that. I don't want to hold something that's lagging, that's not moving in my favor. I wait for a trend reversal, right? If I waited, for example, here, this is a good kind of little kind of mental exercise just to kind of get my perspective across to you guys. And I hope you'll appreciate this viewpoint. It's basically the idea that, let's say, for example, this was the absolute bottom and someone got it, right? They picked it at $16 and I instead waited myself until $20. And we're both riding the wave and we sell at the same exact high price of $40 or $50 on the ETF. Let's just keep it simple, $40. I made a 100% return. But the guy who picked the bottom made, you know, maybe an extra few double digits of percentage compared to me, right? Maybe he made, you know, again, I can't do the math on top of my head, a few percentage points more than I did, basically walking away with a higher profit than I did. He can brag about it all he wants, but he took a much more massive risk profile than I did. And that's the issue here, because you can get lucky picking bottoms sometimes. I've had it happen before on trades. You know, again, I come in with strategy, but I happen to pick the bottom sometimes. Long story short, though, the thing is I don't try to pick bottoms because it's a losing game the majority of the time. And if you're entering into trades like that, the majority of the time you are going to lose money and you're likely going to get caught in positions. If I wait, for example, for this to come up to $20, where it's not only obviously setting usually higher lows, but also higher highs, it's a good signal that the market is reversing. And I can play on a much safer bet here. When I start to see price action like this, where I can just ride the wave. And it's in such a short period of time, we can see it. Cannabis does this time and time again, where once it starts moving, and you see about a good 2 or 3 days here where there's actual substantial volume, and when it actually has a slight pullback, it doesn't correct much, that's when you make your move. All right, now I want to be fair here. If we take a look at the weekly on the ETF, all my indicators are looking great. We got a cross on the MACD, squeeze momentum indicator going up. We've got the stochastic RSI for months. Even though prices decline, there's been a bit of a divergence here. We're starting to see that bulls are getting more eager here, right? And also the higher low looks nice. But I want to see follow through. I want to see follow through. I want to see a clear trend reversal. So I might give this another week, week and a half, see what happens. Even if it was to tick up again to $20, I'm not eager to buy this. That's just my kind of thesis here, because this isn't a market like crypto where I can know, averaging into Bitcoin, that it is better for me to take the risk of taking a little bit of initial loss on paper and buying a little bit early for a 10, 20x return in the next cycle. In this case, I'm not expecting a 10 to 20x. I'm very much expecting something more reasonable, like a 3 to 5x in the market. And I've seen with cannabis companies, you know, 80% of the time probably, it's not best to hold these companies. I've been following the industry since back in 2011 to 2012. As the opportunities have grown in the market, it's just become more clear that you want to hold it when it's trending. Okay? So, hope you guys get my point on that. And if you like this video, guys, drop a like and leave a comment as well. If you've got something positive or negative to say on this kind of topic, I want to hear your guys' opinions. If you have any questions as well, leave them below and I'll try to get to them. If not, you guys in the community are welcome to try to answer as well. And that'll be it for the video today, guys. I hope you guys have a great start to your new year. We've got a lot of exciting things coming down the line, and I'll see you all in the next video. Stay tuned.